Welcome to Business and Finance on Echo Television International. Now, we've seen that the Debt Management Office is offering Sukuk bonds. Now, this is 4,000 naira per unit, and then you can start with a minimum of 10,000, but then as it goes on, the value increases per unit, and then it's out there and it's open for the public to go and get it. And as we know, bonds are fixed income security that represents a loan made by an investor for a borrower, typically corporate or government. A bond could be thought of as an IOU, yes, between the lender and borrower that includes the detail of the loan and its payment. Bonds are used by companies, municipalities, states, and sovereign government to finance projects and operation. Owners of bonds are debt holders or creditors of the issuer. Now, bonds details include the end date when the principal of the loan is due to be paid to the bond owner, and usually include the terms for variable or fixed interest payment made by the borrower. And then these bonds are open for a very long period of time, is not for a short period of time. And then, just as I said, now the federal government, of course, is trying to see how to come up with 150 billion naira, and they are saying that bringing out this Sukuk bond now is not the first time it is being brought out by the federal government, by the Debt Management Office, of course, the federal government through the Debt Management Office, bringing out these bonds. And in the past, we're seeing that these bonds is going to be over $1 trillion, because in the past we've seen 800 plus billion bonds have been offered out, and now the Debt Management Office is including another 150 billion naira worth of Sukuk bonds. Now, according to a statement by the Debt Management Office, the Sukuk is issued by the federal government of Nigeria, specifically the Road Sukuk company, and on behalf of the federal government. Now, we can see the relationship here between the federal government and the Sukuk company PLC. We are seeing that this is basically just as I've define what bonds are from the beginning, where we are seeing that there is an IOU between the lender and the borrower that includes the details of the loan and its payment. Bonds are used by companies, states, and sovereign government to finance projects. So we are seeing that the federal government wants to use Sukuk bonds to finance projects, and they are in need of 150 billion naira. Now, it's said that the Sukuk were offered at 1,000 per unit, subject to a minimum subscription of 10,000 and a multiple of 1,000 thereafter, meaning it's going to double up. And then we see proceeds will be used solely for the construction and rehabilitation of key roads, projects, and bridges across 6 geopolitical zones of the country, the Debt Management Office is saying. So we can see that the federal government is trying to raise funds through selling of Sukuk bonds, 150 billion precisely what they need, and then 1,000 naira per unit. So for you to have, if you're going for 10,000, you're just having one unit. If you're going for 100,000, you're having 100 units. So the higher you buy these bonds, the more you get units in return. And of course, as time goes on, the bonds don't just sleep, they don't just stay there, they increase. And that's why it's important for you as an investor to know how many percentage it's going to be included for the Sukuk bond. We are seeing more than for the Debt Management Office, we're seeing a 2.75%, and then it will go higher to over 7% interest for it now. And it's going to be listed on Nigerian Exchange Limited and FMDQ Security Exchange Limited. So the bond is going to be listed on our exchange and also on the FMDQ Securities. Now, the Ijara Sukuk was classified as a liquid asset by the Central Bank of Nigeria. So if you are thinking of going after the Sukuk bond, you should know that it is very secured. It is going to be listed on exchange. It has been classified as a liquid asset by the Central Bank of Nigeria. Therefore, your money is guaranteed, your money is safe. This is coming from the federal government in order to raise 150 billion. And then keeping your fingers crossed and our fingers crossed that, of course, these bonds will be able to give a lot of interest for those who are willing to buy it and make an investment out of the Sukuk bond. Now we are seeing that demand of crude oil is going high. This is coming directly from the Organization of Petroleum Exporting Countries. Now coming directly from the Secretary General of the organization, he is saying that he hinted that the rising global demand for energy and oil is set to keep crude oil prices elevated. Now weeks back, barely 4-6 weeks back, we've seen that the crude oil kept on rising per barrel. We're at 87, it went to $90 per barrel, and now we are at $95 per barrel of crude oil. And it is a universal price, that is, every crude oil exporting country is selling crude oil per barrel at $95. Now he made it known in a recent interview published, saying oil demand is expected to rise by around 2.4 million barrels per day this year compared to 2022, and by another 2 million next year. This is coming from the Secretary General of OPEC. That is, we are seeing that the need for crude oil is going high, and it's not surprising because we have the crude oil as the raw material, the first product that gives birth to many other oil. We have the premium motor spirit, we have our diesel, we have the jet fuel, and then we have other products that come out of the crude oil, and then the demand is going high. Now, when asked if it could go as high as $100, we have the Secretary General saying it's important not to look at things in a short-sighted manner. It's not about how high. Now, let's not forget that this was an intentional and very deliberate step by OPEC to make sure that crude oil price was going high, because there was a downturn in the price of crude oil. At beginning of the year, we saw a very low downturn as of 2022. Even when crude oil was as low as $64 per barrel, it went a little bit above 74, and then it never went higher. And then the OPEC sat down and brought up a policy that if they were to cut down supply of crude oil, now starting with Saudi Arabia, which is the major supplier compared to other countries, cutting down their supply. Now, automatically, if you're cutting down the supply, the demand will be higher than supply, and this will eventually push up the price of crude oil. And we are seeing that this method is playing out perfectly well for OPEC, and crude oil is going for $95 per barrel. Now, 20 years back, crude oil was way above $100, and it's had a high of over 110 US dollar per barrel. But then I think too much of availability made the prices to be going down, and now OPEC is seeing the need for that. And despite that cut, we are seeing that yes, this policy is working out for OPEC, and then oil producing countries can smile and say crude oil per barrel is going high, which means more revenue. But then the unfortunate part for countries that do not refine their oil is they will still be buying it back at an expensive rate. Now, OPEC is more concerned about the underinvestment in the oil sector. Al-Ghais told international media that the calls for a halt in investment are dangerous. That is to say, over the years, the oil sector have been seeing disinvestment. It looks like a sector that can thrive on its own. No doubt, it has revenue generating potential, one beyond comprehension, beyond imagination. However, if there is this investment in the oil sector, there would be an effect that will be felt, and that is the concern now, not even the price of crude oil per barrel, but that there is this investment going on in the oil sector. And I believe this is to say that before it becomes a major problem, there is a need for investment in the oil sector, not disinvestment, because there is need for money to keep coming into the oil sector as well, for it to be able to remain at the level which it is and to grow higher, because more crude oil sites needs to be found, more blocks need to be created and all of that, and this needs for more investment to go on. And many the demands, as you can see, for this year he projected that it will be over 2 million barrels, and then the year following it will be the same increase on crude oil demand, and therefore there is a need for more investment into the oil sector. And Nigeria is seeing a very high amount of fiscal deficit. We're looking at over almost 10 trillion in our fiscal deficit, and what that means is that we're spending more than we are making. We're spending more money than we are making. The revenue generated is nothing compared to how much we are spending as a country. Now we can see that our revenue is just about 5.3 trillion naira. We are looking at 5 trillion 300 billion naira. And this is mainly from the FAAC allocation, the federal allocation, going to the federal government, the local government, and also the state government. Now, we are also having independent revenue. Now, independent revenue is just there about 1.6 trillion naira. And then we are talking about the FAAC allocation, or just over 3.6 trillion naira. Now, when you sum this up, you see that we are a little above 5 trillion naira. However, our expenditures is around 14.6 trillion naira, which give us a deficit of 9 trillion naira. Now, these expenditures go on statutory transfer of over 800 billion naira. We are seeing debt servicing that the debt management office have made emphasis. Now, your debt management office, we have over 90%, or well, thereabout, of our income going into debt financing. We are seeing over 1.9 for external. For internal servicing, we also over 2 trillion naira going for external servicing. And then we also have personnel cost. Of course, that is the cost for running governance in the country. And we are also seeing capital development funds, where we see the federal government allocating funds to Ministry of Works for road. We are seeing government disbursing funds for refineries to work, for manufacturers, for companies, for the steel rolling mills to be able to function, for the textiles to be able to function. Every other funds that is channeled towards development are all the expenditures we see, and these expenditures are as high as 14.6 trillion naira. Now, the challenge here is that we are seeing that there is a recent increase in salaries. The question is, we are already on deficit. Can the federal government of Nigeria truly be able to finance a debt, a wage increase of just 35,000, in as much as it is for a period of 6 months? We are seeing that the NLC is moving not just for a 6-month minimum wage increase, but a permanent wage increase. Now, our expenditure, of course, is way above what we our expenditure is way above our revenue, and that the government have come up with certain means. However, the question is, are these the means that will truly help the government run at a surplus, or are we keep going to see that we are at a deficit? Now, they are going for rising unfunded fiscal deficit, threatens 2023 budget implementation. Of course, this deficit will threaten our implementation. It means whether we like it or not, if nothing is being done, we will be going on a borrowing spree. Now, we see ministries directed to streamline operation, and by streamlining operation, we mean that perhaps the impact of certain ministries won't be felt as it is. Now, let's not forget that we are still not where we're supposed to be when it comes to the things that should be done in the country. And then seeing that there will be a streamlining, then you wonder where we are heading to. Now, MDAs freeze new hiring, consider revenue generating measures. Of course, MDAs need to generate revenue. And it's not only the MDAs, even states need to generate revenue. Local government needs to generate revenue. And the federal government also have to take the nod oil revenue seriously. As we can see that oil revenue haven't taken us so far. We are not producing crude oil as it is. We are not meeting our quota, and of course any effect on the price of crude oil, despite it going high, will affect our revenue. Now we are seeing liquidity crisis worsen as CBN pulls the plug on cheap money, over 5 billion monthly wage top up pushes up payroll burden. Now we are seeing, after much push and pull, the federal government agreed to give all the categories of civil servants a wage top up of 35,000 per month. Now Tinubu's administration will need at least 5.07 billion to fund this add-on. And don't forget, we're already at a deficit of 9 trillion naira. When you keep adding these billions to the deficit we already have, we will be having more and more red flags when it comes to what we are spending as a country and the way forward. Different ministries are said to have been informed to clear terms to streamline their operation and stop picking bills that will not add value to governance going forward. And this in line, we would like to see our lawmakers, our representatives, truly waking up and seeing everything that needs to be done to cut the cost of governance. It's not all about MDA streamlining activities. It's not about ministries not doing their work to the fullest, but an overall look at what should be done as a country for us to be able to cut down the cost of governance. As we can see that personal cost is one of the highest in what we spend as a country, therefore also adding significantly to the deficit in the country. Now, some MDAs, which are hitherto considered cost centers, are said to have also been handed the mandate of retooling their operations to be commercially relevant. Now, it's not all about if these MDAs are cost, if they're consuming so much cost, but are their impact being felt? Because in the end, it's not all about them consuming a lot of revenue, but if their impact is being felt, then perhaps the federal government have to look at other means that cutting short the hands of these MDAs from reaching their full goals and what they were created for in the first place. Now, with all of these ups and down chaos in our economy, we're saying that World Bank is projecting a 2.9% growth for us. Now, that has gone low compared to the 3.2% growth seen for this year and also for the year ahead. Now, citing currency pressure, insecurity, and other challenges, the World Bank Group revised its economic outlook for Nigeria in the year 2020 to 2.9%, lower than its earlier projection of 3.3%. So we're down 0.4%. And this is not only in Nigeria, but for the whole of West African countries. Now, there are many reasons to why the World Bank is saying this. We're seeing increased conflict and violence in the regions is weighing economic activity. We are seeing that it is weighing on farmers, it is weighing on businesses, it is weighing on investors. And of course, if we're looking at West Africa as a whole, we are also looking at coup, and which has been a concern to the international bodies and the international organization, seeing that it is going to bring down the growth of the country. And now let's see other forecasts, because it's not only for Nigeria, but also for some few African countries, where we can see Angola also, which we know is like we are having a race for who would be the highest crude oil producer daily in Africa. And then we are seeing it's noted that the rising instability, weak growth in the region's largest economies, and lingering uncertainty in the global economy were dragging down growth prospects in the region. Now we are seeing that this report is forecasting declaration of economic growth in the sub-Saharan African to 2.5% in 2023 from 3.6% in 2022. So as at 2022, for our sub-Saharan African countries, which Nigeria included, there was a growth projection of 3.6, and now we are down to 2.5 as a whole sub-Saharan region. But then when it comes to Nigeria, it went from 3.3% to 2.9. Now that is an average. And then we are also seeing that there are other international institutions that are saying South Africa's GDP is expected to only grow by 0.5% in 2023. So we're seeing that also other African countries, not only in the West, but also in the South are going to have a lower growth projection coming from the World Bank and other institutions abroad. Now, what is the way forward? If the factors are insecurity and a lot of uncertainty in the region, then if insecurity can be fixed and other uncertainties offshore can be fixed, where we are seeing our currency not giving room for growth as much as it should be, then if these things could be put in place, then perhaps our growth projection will be as it was and not going down by 0.4%. Now, states are borrowing to pay salaries, and we are seeing over 46 trillion naira coming from states borrowing to banks. And we have Zenith Bank, Axis Bank, and Fidelity Banks as the major borrowers to states here. Now, we have data from the first half of 2023 financial statement of these three commercial banks showing that state government have been borrowing for them and precisely for salaries. Now, we have the federal government stepping in directly from the central bank, but it seems it's not been enough. And then state governors have to go to banks to be able to pay salaries to their workers in the state. And even at that, with all of the borrowing, we have a lot of states that are still owing workers salaries for over 3, 5, up to 6 months in some states. Now, we're seeing that it was followed by Zenith Bank. We have Access Bank first, then we have Zenith Bank, and then Fidelity Bank. Now, the bank noted federal government intervention fund in CBN bailout fund of 80.65 billion naira as of December 31. Its present funds of state in the federation that are having challenges meeting their domestic obligation, including payment of salaries. Now, the loan was routed through the bank for a lending to the state. The bailout fund is for 20 years in 9% annually, and so far so good. We are seeing that these funds that the federal government have kept in banks for state precisely that are having a difficult to pay salaries have been exhausted, and it is 80 billion, and then we're seeing 46 billion already out of that from a lot of states. And then it means that we are having an increase in our state's debt profile, and above all in the internal debt profile of the country, and it's just going to keep going high until something is being done, until these states start generating revenue, and until we have bigger and more employment coming from the federal government, coming from investors, coming from manufacturers, coming from all the places that it's needed to and is expected. We might be seeing that states will keep going on a borrowing spree, and above all, it's just going to keep adding to their debt profile, and of course, it's not going to be sustainable, as what the federal government has given as a bailout to states will soon be exhausted. Now, we have petrol landing cost hit 720 naira per liter, and for some reason fuel pump price are still maintained at 600 620 and thereabout. But then we are seeing that the fuel landing price is now at 720 naira to a liter, and depots are being deserted. Many petroleum products depots are currently deserted due to lack of supplies caused by currency volatility. We remember marketers have been lamenting for many weeks now that the unavailability, the shortage of dollar supply is causing them to not be able to import oil into the country. Now, we are seeing that aside from that the marketers have to deal with, they are now struggling with the landing price for petroleum going high to 720 naira. Now, petroleum products dealers also indicate that filling stations are closing down in huge numbers on a daily basis. It was also gathered that the cost of importing PMS to Nigeria has risen to 720 naira per liter. Now, we have the National Executive Council of Meeting of the Natural Oil and Gas Suppliers saying that the depots are either dry out or out of stock. Either they cannot afford to buy more due to our currency volatility, the exchange rate, the forex crisis and shortage, or due to the fact that the landing price is going high and high and high. Now, depot owners are so terribly affected by the increased cost, and we are also having fuel stations being deserted. Now, banks are not willing to guarantee funds released to stakeholders as a result of the difficulty, instability, and galloping rates of foreign exchange and high cost of the dollar. So we are seeing many depots being dried up, and of course, filling stations are also feeling the blow. Both the independent and major marketers are so terribly affected. Now we have the independent marketers, of course, who are not as big as the major marketers here, still feeling the blow. So I believe that the major marketers are still in business because they are the major marketers. And it's just like when it comes to small, medium scale businesses where we have, compared to larger industries and manufacturers closing down due to inflation, exchange rate in the country, and all of the economic crisis. Now we are seeing that this is hitting our marketers, oil marketers, and depots are being deserted because they cannot afford to buy petroleum at the landing cross as it is now, and also fuel station are feeling the impact, and it's just a vicious cycle that keeps going round, and then we are still wondering. And in fact, it is kind of mysterious in a way that we are still able to get fuel pump, we're still able to get petroleum at the pump price that it is now, if the landing cost is way above what we are getting at the fuel station. Perhaps the government is intervening in ways that we cannot see, but as it stands now, fuel subsidy have been removed by the federal government of Nigeria. We have it out there, and therefore the reason we are seeing the fuel pump price at the price it is now. And that is all for today on Business and Finance. See you next time. Goodbye.